Hello and welcome to the Friday, September 13th market update. So the question is this: will the trend continue? Mortgage rates absolutely continued the downward trend this week, inching closer and closer to 6% for a conventional mortgage, and that's according to Mortgage News Daily. But believe it or not, FHA and VA rates are now approaching 5.5%. We're getting close to that. And I think the trend will continue. So the Fed meets next Wednesday, and it's almost a foregone conclusion. The Fed will cut the Fed funds rate by 0.25%. However, is it enough to make a big difference? I don't know. I think they should go 0.5%. I believe the Fed is way behind the curve, and if they dilly-dally around too long, the economy could 100% head into a recession. So I think they need to be careful. Now, the Fed has a dual mandate: maximum employment and price stability. The Fed initially raised the Fed funds rate in the beginning due to the rampant inflation that peaked out at 9.1%. They were 100% late to the game on what they termed transitory inflation, and the Fed funds rate went up to slow the economy down, attempting to bring back price stability. I hope they don't make the same mistake on the way down where they react too late and brings the economy into recession. So the cost of price stability and higher interest rates is it can impact the job market long term. It takes time for this to happen as businesses are slow to lay off people they've just trained, thinking the economy will turn around quickly. Individuals start using their savings and credit cards just to stay afloat. So the real question is, can businesses and individuals hold on a little bit longer for those rates to drop a little bit to hang in there? And I don't know if that can happen. So many people are going to have to make some tough decisions here pretty soon. So some recent closure announcements are the discount stores, Big Lots and 99 cents only stores. They're shutting down. And we're also seeing small retail and restaurants closing as well. So job creation is way down, and the BLS, Bureau of Labor Statistics, keeps adjusting the job numbers down. So what comes out isn't really what's happening. So I don't believe the economy is as good as people are led to believe. So from my vantage point, I see a weak economy that could lead to a recession, with the Fed trying to play catch up by lowering the Fed funds rate further in November, resulting in lower mortgage rates. The good news is the outlook for lower mortgage rates is very good through 2025. So what about the outlook for the Las Vegas housing market? There are a lot of buyers that are in a wait and see status, waiting for the election outcome to help make their decision. And this uncertainty leads to no action. So they're just hitting the pause button. Homebuyers just don't want to think about it right now. So they just kind of freeze. So it's going to be a period of time before they jump back in. And then we got December with Christmas. And I think maybe in January, we could see certainly a big spurring of people just saying, I'm done waiting, let's get going. So speaking of the election, the campaigns are spending millions and millions of dollars pushing out their messages on social media. They want to take up your brain space up here. Social media influencers have seen their views decline significantly, and there's like going, what is going on? It's because of the paid ads that have taken over your feed, your social media feed. So your buyers may not even know that interest rates have dropped significantly because their feeds are clogged up with all the political messages. You need to get out there, get that message out to them regarding lower mortgage rates. So food for thought. Since May 1st, mortgage rates have dropped almost 1.25%. That's a big drop. On a $450,000 FHA mortgage, this translates to a monthly savings of $366 per month. So that's a big savings. And a lot of people that may have been looking, 3-4 months ago, were looking at being qualified for something less. That actually could translate to buying a home that's worth about $60,000 more than what they may have been considering just 4 months ago. So get the word out, educate your buyers that mortgage rates have dropped, and it could be an ideal time for them to jump into the market. So as always, feel free to reach out to me directly to get your buyers pre-approved and educated so they can make the right decision for them. You can also send them to my calendar link where I will go through a free CIA analysis, credit, income, asset analysis, so they know exactly where they stand now and what they need to do to get into a home down the road. So let's run their numbers. Hope you have a fantastic weekend, and we'll see you next week. This is Gaylord out.